You paid your premiums. You followed the rules. You thought you were covered until a lawsuit hits you for something that happened years ago, and your insurer coldly replies, "This is not covered." Reason? Because of a quiet killer in your policy, the retroactive date. One overlooked line, and your entire claim gets denied. This isn't just fine print. This is financial survival. Welcome to Insurance World TV, where we break down insurance into simple, relevant, and practical insights. Today, we're exposing the truth about retroactive date coverage, a tiny clause that could save your business, protect your reputation, or leave you completely vulnerable. Let's unpack how this silent clause works, where it applies, and how to make sure it never works against you. Question 1. What is retroactive date? A retroactive date is the starting point in a claims-made insurance policy from which your coverage begins for past events. It means the insurance will cover claims that arise from incidents that occurred on or after that date, even if the claim is reported much later. In simple terms, it is the earliest date your policy will cover claims for incidents that happened in the past, but only if they're reported after the policy begins. If something bad happened before this date, even if you report it today, your insurance won't respond. It's like having a wall behind you. Anything that happened on the other side of that wall is off limits for coverage. Illustration: if the retroactive date, January 1st, 2020, any incident that happened in May 2019 is not covered. But if the incident happened in March 2021, it is covered. If an incident happened before the retroactive date, even if you report it during the policy period, it's not covered. This is especially critical in claims-made policies, where coverage is based on when you report the claim, not just when the incident happened. Let me give you a metaphor. Imagine running a race. The gun goes off, and that's your retroactive date. No matter how fast or strong you are, you can't win if you started running before the official starting line. So, why does this matter? Because even if you buy a policy today, it won't automatically protect you for everything you did in your career. It only protects what happened on or after your retroactive date, and only if you keep the policy active without lapses. Many professionals, from doctors and lawyers to architects and consultants, rely on this clause to protect them from old mistakes that show up years later. Bottom line, if you don't know your retroactive date, or if you let it lapse, you could be totally unprotected and not even realize it. How does the retroactive date apply? Now that we know what a retroactive date is, let's talk about how it actually works in the real world. Most liability policies, like professional indemnity or medical malpractice, are written on a claims-made basis. That means your insurer only covers you if 2 conditions are met. 1. You report the claim while the policy is active. 2. The incident occurred on or after the retroactive date. Let's say you're an accountant. You bought a professional indemnity policy in 2020, and the retroactive date is January 1st, 2020. In 2024, a client sues you for an error in their 2021 tax filing. You're covered because the mistake happened after the retroactive date and the claim was made while your policy is active. But now let's say the error happened in 2019. Even if the claim is made today, you won't be covered.
Why?
Because 2019 falls before your retroactive date. It's like it never happened, as far as your policy is concerned. This makes the retroactive date a critical marker in claims-made policies. If you ever switch insurers, you need to make sure your new insurer either matches your old retroactive date or offers prior acts coverage, which protects your previous work. And if you let your policy lapse, even briefly, your retroactive protection might be lost, resetting the date and exposing you to massive risks. In short, the retroactive date isn't just a date. It's your legal safety net. Protect it like your business depends on it, because it does. Question 3. Where does the retroactive date apply? The retroactive date is a feature of claims-made insurance policies, meaning coverage depends not just on when a claim is made, but also when the event occurred. Here's where this crucial date shows up and how it affects different professions and industries. Policy number 1. Professional indemnity insurance. This covers professionals like accountants, architects, engineers, and consultants from negligence or errors in their work. Example: you're an architect who designed a building in 2021. Cracks appear in 2024, and you're sued. As long as your retroactive date is 2020 or earlier, and your policy is active, you're covered. Policy number 2. Medical malpractice insurance. Doctors, nurses, dentists, and therapists use this to protect against claims of misdiagnosis, surgical errors, or negligence. Example: a surgeon operates in 2020, but the patient discovers a complication and sues in 2023. If the surgeon's retroactive date is before the operation and coverage is continuous, the claim is valid. Policy number 3. Errors and omissions, EandOInsurance. Common among IT professionals, financial advisors, insurance brokers, and marketing consultants, this protects against mistakes in service delivery or advice. Example: a software consultant gives incorrect code integration advice in 2021, causing the client's site to crash in 2023. If your retroactive date covers 2021, you're protected when the claim comes. Policy number 4. Directors and officers, D&O liability insurance. This protects executives and board members from claims related to mismanagement, breach of duty, or decisions made while in office. Example: a company director is sued in 2024 for a financial decision made in 2020. If the D&O policy's retroactive date covers 2020 and it has been kept active, coverage applies. Policy number 5. Cyber liability insurance. Used by businesses handling sensitive data, like hospitals, fintechs, and e-commerce platforms. This covers data breaches, hacks, and privacy violations. Example: a data breach from 2021 is discovered in 2023. If your cyber liability policy has a retroactive date from 2020 or earlier, and there's no gap in coverage, the insurer will respond. Final word: if you have a claims-made policy, your retroactive date is your lifeline to past protection. Know it, guard it, and make sure it always works in your favor. Why does retroactive date matter? The retroactive date matters because it determines whether you're protected from claims about past mistakes. Many lawsuits and liability issues don't show up right away. They come years later. But here's the catch. If the incident happened before your retroactive date, no coverage. If your policy lapsed even once, you may lose protection for all prior work. So, even if you've been insured for years, one missed renewal could erase your past coverage completely. That's why knowing and preserving your retroactive date is not just important, it's essential. What are the benefits of the retroactive date? The retroactive date isn't just a technicality, it's a tool that works in your favor when used wisely. Benefit number 1. Protection for past work. It allows your current policy to cover claims for incidents that happened years ago, as long as they occurred on or after the retroactive date. Benefit number 2. Financial security. Late claims can be expensive. Retroactive coverage ensures you're not paying out of pocket for old mistakes, especially in high-risk professions like law, medicine, or consulting. Benefit number 3. Flexibility when switching insurers. You can negotiate prior act's coverage or request to maintain your original retroactive date when moving to a new insurer, preserving your history of protection. Benefit number 4. Essential for professionals with long-tail risks. Professionals whose work can lead to claims years later, like architects or auditors, rely on this for career-long liability support. Let's now turn our attention to the limitations of the retroactive date. But while the retroactive date can protect you, it also comes with serious limitations if misunderstood. Limitation number 1. No coverage for predate incidents. Any claim related to something that happened before your retroactive date will be automatically excluded, no matter how valid it seems. Limitation number 2. Policy lapses reset protection. If you let your coverage lapse, even for one day, your insurer may issue a new retroactive date, wiping out protection for all your past work. Limitation number 3. Coverage denials due to date confusion. Many policyholders assume they're protected simply because they have a policy. But if they don't check the retroactive date, they might be caught off guard at claim time. Limitation number 4. Not applicable to occurrence-based policies. The concept of a retroactive date only applies to claims-made policies. If you're using occurrence-based coverage, it doesn't exist and isn't needed. Wrap-up tip. So remember, the retroactive date is your legal safety net, but only if you know it, protect it, and keep your policy active without gaps. The retroactive date might look like just another line in your policy, but it holds the power to protect your past or completely deny it. It's the silent gatekeeper between your professional history and your financial future. Whether you're a doctor, consultant, engineer, or executive, knowing your retroactive date and keeping your coverage continuous could be the difference between being fully protected or painfully exposed. Don't leave it to chance. Ask your insurer. Review your policy. Protect your retroactive date like your business depends on it, because it does. Thanks for watching. This is Insurance World TV, where we make insurance simple, relevant, and practical. Don't forget to like, share, and subscribe, and hit the bell so you never miss an episode that could save your wallet, your business, or your career.